JAMB 2016 Principle of Accounting, Question 4. The question says the gross profit for care is, that means we are expected to calculate the gross profit for care, and in doing that, that means we need to prepare trading account for department care in this departmental account, because these items are items of departmental account. We are given, of course, department care and why. And if we look carefully here, we have stock for the both departments. Stock for care, 2,500, why 800, and then purchases 120,000 for department care, and that of Y is 100,000. Sales of department care 180,000, and that of Y is 200. We have sales of department care 8,000, and that of care 30,000. Closing stock department care 3,000, and that of Y 1,500. And we are given rent expenses of 1,500 to apportion in the ratio 1:2. So how are we expected to find our gross profit for care? Using items, all items that has to do with care department, to prepare departmental trading account. So looking at this, we have prepare a departmental trading account for care departments. So the very first thing we need to do, we post our sales to an extreme end here, where we have 2 naira signs, extreme end of the last naira sign, our second naira sign. Our sales is already 1 for department care is 180,000, and then we less cost of goods sold. Now all these items, opening stock, purchases, closing stock, are all items of cost of goods sold. Now you know too well that if you buy goods, of course you must sell them. So the costs at which you incur in buying these goods are all of this, and then we must minus from our sales. So let's take the cost first, so that we know the actual cost we incur in making sales or buying our goods. And then looking at this, we have costs of goods sold as the heading. Now the first item, however, is opening stock. Opening stock is 2,500 as given in the question. 2,500, that's for department care. And then the next item there is purchases. We need to add our purchases when we are preparing trading accounts, and purchases given to us is 120,000. Now looking at the question, 120,000 was given as purchases, and then we need to add the two together. And once we add the two together, we have goods available for sale. This is now the goods that are available for us to sell to our customers. And then that is 122,500. And then immediately after that, we are expected to minus our closing stock. And our closing stock is 3,000 as given in the question. Closing stock 3,000. And so if we minus the closing stock from 122,500, we are going to have a figure which is called cost of goods sold, which is the cost of 119,500. And so that is our actual cost incurred to make sales. Now if we minus these costs, of 119,500 from our actual sales, which is 180,000, we are going to have a balancing figure which is 60,500, and that is called our gross profit. So sales minus cost give us gross profit, and gross profit here is an initial profit. Now looking at the option, where do we find 60,500? That's option C.